of TFNN. Live at TFNN, The Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love it.
Right next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
It's such a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Hi, everyone. Basil Chapman. This is, of course, the Money Masters show, and Tom and Steve are usually here, but right now they're in the Go Long America show, and this is the trip that they've been talking about for so long. It's underway right as we speak. They're in Denver, I believe, today. Go to the front page of TFN and just check out the places you want to get there. You want to be there. It should be absolutely 3 hours of education. 3 hours of education, 1.5 hours each, questions, the works, answers to your questions. It's something that if you are in the area, go. So they'll be in the Boston area, and this is, of course, the Tiger Channel TV, and my name is Basil Chapman. I am, in fact, one of the hosts here at TFNN. I have a service called The Opening Call, very comprehensive daily look at the markets, about 6, 7 more charts every single day, discuss them in great detail, where we are, what we're looking at, what we need, what techniques you can use intraday. I also show the S&P. I show the 120-minute or the 10-minute and 120-minute charts, if necessary, of the E-minis, and give the parameters to look for, the chart pattern, why we're looking at it, what we're looking at, the technical indicators that I use, the MACD, the stochastic 9-period moving average, left side, right side, price, time match, cup and handle formation, not one of my favorites, or the cup and ladle, one of my favorites, my own invention, the Roman candle that I talk about, all that stuff, and of course the Trader's Corner. Now, what I'd like to do, I'd like to do two things right at this moment. I want to go through all the different indices. I also want to take your calls. So let's go through that. I'm looking at the XLF. When Steve's show, I meant to get to the XLF. I ran out of time because of our callers and because I wanted to be very comprehensive in what we were looking at. But the XLF, which is the S&P Select Financial Spider Fund, has made a high-level consolidation as the technicals were pulling back, and 1486 was the most recent high. You realize that's 1486 from a low bar that started on the 19th of December for the second wave count. The actual low was November was the 23rd. So this, in my technique, the Chapman wave, what I look for, wow, let me just do this right now. Where is the chart I had? I don't know if I can find it. Yes, here it is. I'm just going to use this chart to show the techniques that I use. I'll demonstrate it while we're talking. The XLF daily, I'm just going to switch this to a daily. This is the naked chart. I hope I remember to get rid of it. If you go to the XLF low of the 23rd of November at $11.73, and I'm going to show this technique in my webinar coming up a week from tomorrow night at 6:30 Eastern Time. I will demonstrate. I'm going to use none of the moving averages, none of the technicals that I use. I'm going to show just the naked chart. I'm going to do that right now. Remove. I'm just going to make this what I call the naked chart. In fact, I will just keep. Nope, naked chart is a naked chart. Here we go. Every one of these gone. Now look at this. The premise of the Chapman wave is to identify the most obvious lowest low bar. So you go to the left and you look, and I always want to go a little further because you could start your wave count and find you just missed the lowest low and you've miscounted. So this is obviously the lowest low of significance. Oh, we've got one over here. So we're going to go to October. That's the one of significance. October the 4th at 10.95. Now look at this. The premise of the Chapman wave is to get at least a peak A, a peak B, a peak C, and a peak D. Let's see what happens here. These are called floating letters. That's letter A. That's letter still A. It's still A. It's still A. This is leg A. This is leg A right up to the 12th of October. So I put an A, and that becomes a peak A because the very next bar is lower. The entire bar. Then I look for 1 penny above 12.96 to start leg B. Well, on the 19th you get 13.01. That becomes leg B. Then wait a minute, I want leg C. Well, 1 penny above leg B starts leg C, and it goes leg C until it becomes peak C on the 20th of October. Then what does it do? It goes to leg D, and where does it stop? Oh, I was supposed to take those out. I didn't. Thank goodness I didn't, because look where it stopped. On exactly the 200-period exponential moving average. Did I use a Chapman wave sequence? Yes. Just A, B, C, D. 4 letters. Is that an amazing thing? Then it pulls back, and it pulls back to trough A, trough B, trough C. On the way down, you don't have to get your 4 letters. I don't know what the reason is, but that's just the way it is. So you get a trough C, and you start a brand new A, peak B, peak C. I'm gonna tell you what it is in a moment, and I'm gonna put a down arrow and an up arrow. I mean, this is the XLF. I know that was going to work out. Look, 1173 was the low on the 23rd of November at 1173. You go to peak A, 28th of November, peak B, 30th of November at 1287, peak C with the doji on the 13th, on the 5th of December at 1333. And you make your peak D under the 200-period moving average at 1338 on the 7th of December. You pull back, and you start what? You start another one. You go trough A, B, C. I'll type it in. A, B. So just in this little demonstration alone, we've got 2 peak Ds, perfect peak Ds, and we're going to go to leg A, peak A on the 27th of December, peak B on the 3rd of January, peak C on the 5th, higher high, C, at peak D right at the 200 period as simple moving average with a doji on the 12th of January, and wait a minute, something else happens. Look what happens. It recycles in a brand new buy mode, and it goes to it has a one-day consolidation, starts a brand new A, B, C, D, and now comes one little extra peak at an E, and it pulls back again. So look at this. In one little demonstration, I've given you one complete buy mode in the Chapman wave and the XLF, S&P Select Financial Spider Fund, a pullback, another buy mode to where the 4th highest peak, a pullback and where to another 4th highest peak, that's 3, and a 4th one, you get a little bonus of a peak E, 5th highest peak. I mean, that's the technique in its simplest form. I'm going to be explaining everything in great detail in my webinar Wednesday, the 29th, leap year, Wednesday the 29th at 6:30 p.m. Eastern Time. So let's get rid of this. That was fun. And we'll talk about the parameters that I'm looking at. INDU. This is the Dow. The Dow right now is at 12,959. It made a new recovery high today at 12,983. I said to my subscribers, I got a really detailed report. To my subscribers, I said, the Dow 970s to 12,990s, that is an area with tremendous resistance. If the Dow is able to power through that, and think of this, earlier in the first hour I did Steve's show. Steve loves to talk about excellence, and he had that commercial with Rocky, how Rocky's film, how it evolved, and how he sold his dog so that he could have enough money. I mean, just an incredible story. So here, what we're looking at is, in that first hour, what I wanted to show, what I was talking about, were techniques that can enhance your ability to identify turns in the market, continuation pattern. The Chapman wave is a forward-looking pattern. Now, when you look at this, when you're looking at the way the Dow has come back, and what I want you to talk about in the earlier show, and I'll talk about it now, is look at the way General Motors has turned around. For those of you who've been listening to me for a very long time, you know how I spoke about 5 years ago about the South Korean Honda. I couldn't even pronounce it properly. I said, wow, not very good, but we're going to watch them. 3 years ago, I said, that is one heck of a turnaround. 2 years ago, I said, that is the turnaround. I've never seen it. Why cannot our American companies do that? Why can't General Motors, Chrysler, why can't Ford do that kind of turnaround? Why can't they produce quality goods and get better and better and better? Well, all of a sudden this year, for the first time in at least 50 to 60, since the 1955 Ford Thunderbird, we've not had that kind of quality that's come out. When I saw, just recently, I saw a 55 Ford Thunderbird, I looked at it, I said, unbelievable. Just all the stuff that it had, I believe it even had electric, windshield wipers, the intermittent wipers. I mean, what happened? I remember talking on the show years ago saying my old Volvo that I bought just to have around for when my daughter comes visiting, had, from 1987, in 1984, it had intermittent wipers, heated seats, it had sunroof, it had everything. American cars didn't have anything. They had cup holders. This is really big American cars. The accountants said, we can't do anything, but you can add another 7 cup holders. Now it's so different. That's quality. So maybe we're looking at a phase where, the market might pull back, but perhaps the General Motors, the Fords, the Chryslers are really showing some kind of a turnaround because the quality is coming back. It is not the top. The Cadillac has not yet got the quality. I can say this. I haven't driven the car, but I've sat in the car at the different shows, and it's really fab. The Cadillac line up, 7 models they had this year were fabulous. But I don't believe that when I sat in the BMW, I was sitting next to this guy, top of the line, I said, wow. It was just, the Cadillac is not there yet, but it's getting there, and they will get it. That's quality. So there are techniques we want to use, and I'll talk about some of those techniques as soon as we get back from this break at 877-927-6648. Love to hear from you. Basil Chapman sitting in for Tom and Steve. The Dow is up 7. The S&P is up $1.67. Be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Everyone, Basil Chapman. We're back. I have a chart right here of the iShares Dow Jones U.S. Consumer Cyclical Sector. It is at all-time highs. Now, I've been involved in the market for a very long time. And my guess is that in many ways the market was hijacked by the crisis, by the bank, and it was really a real estate crisis. And that over time, there will be a recovery in real estate, but the sexiness of real estate as a, and I'm not talking about if you're in the business or if you really understand the financial aspect where you can look at a property, do an assessment and say, I can get cash flow. Cash flow is everything as far as I'm concerned. It's not capital gains. That can come, that might not come. It's cash flow. But the most important thing is that there are going to be other sexy areas. And what I mean by that areas that, like Apple, that are just incredible vehicles for wealth gains that are in the stock market and at this particular time, we are looking at if the iShares U.S. Consumer Cyclical is at an well, the chart doesn't go back long enough. It only goes back to 2000. But it's called recovery highs, or at least close to all-time highs. And if the RTH, the real estate market vectors, is this the right chart? What happened to my notation here? This is the right chart. Let's go to the one. Is it the XL? Just someone remind me again. I did it on Friday. What was the symbol for the S&P retail? Just for some reason, I'm just not remembering. Usually, I know these things really well. So what we're looking at here is that the retail index. I don't have the notation for some reason on this chart. Of course, I've had it. It's A, B, C, D, and a brand new A, B. This is leg C. Retail would not. No, the RTH is what I've got. It's the other one. Thanks, Steve. Why would retail be at this height if there wasn't something going on? If people who have jobs aren't buying? I think that's really the issue. Is what I've been talking about for a long time. People have got over the fact that they might lose their jobs and are saying, I can buy things, and that's the only reason. How can you get this kind of recovery in a recession? No, it wasn't. It was an XL something. It was a S&P. I'm getting help in the den. What a fantastic meeting we have here, folks, in the den. People are listening all the time. They check my notation. If I forget a peak, they let me know. It's just a wonderful vehicle. No, I can't remember it. In fact, maybe I've got it written down. I really need to find it because it was so important. There it is, S&P. Nope. All right, I'll find it. But it's a very similar chart. The only reason is that I don't have my notation. XRT. Thank you. XRT wasn't XL. XRT. Now look at this. This is the XRT, which doesn't go back as far. But I have no way to count it right now. But to say that everything about it says that it's probably leg B to the upside. It could be a G, which is unusual. If this is a B, it means that we're going to go on for months to higher highs. I mean, that's the way. I have no choice but to look at it right now. Let me give you the bearish side. And the bearish side is if in the month of February, still plenty of time, you close under the high of 56.44 that was made in July of last year, that'll say, you've got to be careful because now there could be a deeper consolidation. So I wanted to go through that. I wanted to also talk about an aspect that for me is really important. Look at Ford Motor Company. It made a rare, and this is what I call a smooth peak G. I probably will talk about that in my webinar, how that comes about on Wednesday a week. It looks like the sixth highest peak like an F, but it has to occur in a certain way. This particular one, the smooth peak G. Well, it went from $1.01. Those of you who are listening, you remember Ed Young, fantastic technician who's here at TFNN. Hope he's improving a lot. And retired a little early because of ill health, spoke about buying Ford in the ones. Can you believe it? It went all the way to $18.97. It pulled back to $9.05, and now the monthly chart says this is a brand new leg A. Now, I'm going to talk about this as well in the Chapman Wave for Wednesday week. You see this bar right here on the October? That cannot be peak A because you have to make a trough before you can start the wave count to the upside. So this is Ford Motor Company holding really well. The key level to watch on the monthly chart is between $12 and $11.40. That's going to be the key support if there is a pullback in the next few days. But today we made new highs, recovery highs. That means my weekly charts have extended last week's leg up. I'll talk about that as well because it's a very positive sign. I'll be back. Basil Chapman sitting in for Tom and Steve. Dow's up 9, S&P's up 2.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Tom and Steve. In fact, I was just thinking about this a few minutes ago. There might be some of you that have just never heard me. Just never heard me. I'm on at a different time, and I'm usually on at 11. So let me just do this, because this is a very important week as far as I'm concerned in the market. It's actually a very important session, and I'm going to explain why. So let me do this. I'm going to go through I'm going to go slowly, because you might not be used to my accent, South African accent, although I've been here a long time. Let me just go through these. The Dow daily chart says we've made a new recovery high today. The stochastic is at 87%. For me, anything above 80% is really good. The MACD is, the slow-moving average is pulling down, has turned down. We're making much lower numbers in the MACD, the moving average convergence divergence. But the fast-moving, that yellow line, the fast-moving, the 9-period differential of the MACD is starting to move up, but hasn't crossed back positively. So it could be either lagging, and it'll definitely improve if the Dow is to jump 100 points or so. I shouldn't say definitely. It should cross positive, but it might deflect lower again. So the downside would be if by the end of the day there is a reversal, and that reversal takes the Dow lower, and immediately tomorrow the Dow futures are down 12.15 in the morning, and the Dow takes out 12,880, then takes out 12,800, and by Thursday or Friday is trading at about 12,750 or even lower, 12,740, which will be below the 15th of February's low bar. That to me would say, okay, now we've got a timeout, and you could be looking at, from the high of today, you could be looking at the 12,580s, 12,500 area as the key support that for me would be absolutely imperative to hold. That would be the 12,529 low of the 30th of January. The weekly chart, though, because it made a new high bar today, is still in leg B. Remember we were talking about, I was demonstrating that just a few minutes ago in the XLF? If this is leg B, and I have to be conservative, I have to say it's leg B/F. Why? Because the low bar of 9,575 back on, was that the low? Yeah, back on, here we go. Back on the 9th of, the week of the 9th of July of 2010, hasn't been taken out. So this could be just a continuation of the previous buy mode, a little late, I grant you. But that's the way I'm looking at it right now, that it would have to be F/B, but my preference would be to call it B/F, meaning B is very positive because in the Chapman wave you're still supposed to go to a leg D. F would be negative because on the 6 highest peak, that's when you can get a really deep and long pullback. But the MACD is still very good, and stochastic still very good at 95% in the weekly chart. And you have that potential squash. I can't go into that now because that's a different technique. But for me, that between the stochastic and the MACD, that's very important. If you're looking at the Dow monthly chart, we have broken out above the 12,876 previous high. I have to call this leg E. I have no choice in the monthly chart. But what, and I'm only saying this kind of rhetorically, as a questioningly, what if this is only a brand new A? Because General Motors, Ford, and Chrysler have turned the corner. What if people say, you know what, we have to buy cars. We've kept them for the longest period without buying new cars. We've kept our old cars. This is the longest period we've had. What if they stop buying Toyota and Camry in the same numbers as they did before? What if they bought American cars? Surely that would do for the economy what we've wanted all the time, to bring in American money for American products. Do you understand that this is a really important period? Now, I'm going to go to something that I never even thought I'd get to, but I need to bring it up right now. I discussed, for my subscribers, I was asked to show this chart. I'd forgotten about it for a long time. I brought it back up. This shows the 7-year phases from phase 1, 2, 3, 4, 5, and now we're in phase 1 or 6. I'm calling it 1. And these go in 7-year cycles from 1974 to 1981. You can see the charts right here. Phase 2 is 1982 to 1987. Phase 3 is 1987 to 1994. Phase 4 is 1994 to 2000. Ever rising expectations. I give them all base building, breakout to new levels, period of recognition. That was 87 to 94. Then we get to the period of ever-rising expectations, phase 4, 1904 to 2000. Then period of pain, recovery, and then excessivity, phase 5, code, I called it. And then you get 2002 to 2007. That was a 5-year period, but it was started at 2000. So it goes 2 years plus 5. And now look what we've got. We've got an 18-month correction from cascade, a waterfall cascade from 14,198 in the Dow from October of 2007, plunges down to trough F, and all those letters here, those are the letters of the Chapman wave, and you plunge down to a trough E at 64.69. Those of you who are listening, remember we got long on March the 6th, the Dow Diamonds at 66.50, I believe it was, just about 150 points off the exact low. And then about 2 months ago, it was, I started typing this some time ago, but about 2 months ago, I called it phase 1 rather than phase 6. And that's 2007 to 2014. But you don't have to go to new all-time highs. It could be a period of a wide, like in 1969 to 1970, where you were in a massive trading range with 1,000 as a major top. Now look at this. You've got your 18-month pullback from October to March of 2009. And then you've got a period that is going in next month, will be the third year. So isn't that incredible? And I call this U.S. Autos finally improved quality. Actually, I typed it in ages ago. I've been talking about that already for over a year from the auto show of 2010. Political and financial chaos, huge market trading range unfolds, and we're in, I have to call this leg E for now. So it's the question. What if it isn't E? What is it A? I'll just throw that out. It doesn't bother us. We're looking at what are we going to do right now? How are we going to make money? So now let me show something else. In what I show subscribers every day are the 5 quadrants. It's the 120-minute chart, which is in a beautiful up channel, and it still remains in this up channel with what I call an inside track, one of the techniques that I teach, an inside track where there's a repellent zone which worked beautifully, and we aren't even close to it now because there's a rising line. And this has to be considered leg C in the 120-minute chart. I don't know, it could be G, but I'm calling it leg C. So that's 120-minute chart is so far quite positive. The VIX index is way down, and I'd spoken about this quite some time ago. I said, I have mantras that I go with, that I stay with for sometimes a long period. Like I said 7-8 years ago, that eventually we will be Japanizing our U.S. government bond yields, and we will go down to almost zero as the housing market eventually just completely collapses, a 10 to 20-year bear market in housing, and the Fed is just forced to push in whatever they can and keep rates as low as possible. I say it's kind of there, but it's not really Japan, and it's not there enough for me to say, hey, bravo, the idea is good. Well, the same thing with the volatility index. I said that until the volatility index can remain below 28, we will have a tough time getting to the 12,500s. Well, it plunged down to 16.10 in February, hit 21.98 on the most recent rally, and now is at 18.08. I consider it to be that's the benchmark. That is the critical thing. That is more important than any other technique as far as I'm concerned. If the volatility index, the buying power, remains low, the index remains low. And that's not power. I didn't mean buying power. I mean the volatility index, fear, remains very low. It can remain low for a very long time, and I had shown the long-term charts of the volatility index being in a trading range below like 22 to the 15s for a long period, about as much as when it goes to the volatility on the upside. So there's a 50-50 ratio there. Now, what's really interesting as far as I'm concerned, and this is what I wanted to do, I said I wanted to show the charts and the different time frames. You see, we went to that peak D at 12,876 in the Dow, a 99% recovery. That's fantastic. That's a bull market. We've only pulled back to 10,404. There are a number of different Chapman wave techniques that I've got you. I'm not going to discuss them. Now we've gone to this next leg at 12,000. Today's high is 12,993. That says to me that there is still a fear of missing out, and rallies are being bought. When we see that there's a triple-digit down move followed by a second triple-digit down move, we know that we are going to be in for at least a short-term, sharp pullback. That's what I believe. Now let's run through some of the other things that I believe. If you're looking at crude oil, CL, is that the H contract? Let me go to this. Now, I don't know about the contango and all this stuff. I'm looking at the contract, the March contract. And that March contract is made an almost perfect left side, right side price time match to the break down and try and recovery of the week of May the 13th. 105.80 was the high. So in time and price, we've got another 1-2 weeks to break above that level to get into that very ugly candle of the 6th of May. Week of the 6th of May with 114.87 high and a 97.95 low. Because if you do that, you've got the same time frame to get to, and that would be the week of the 9th of March to get back to the previous high of 114.87. Can it do that? I don't know. All I can say is that the monthly chart is very positive, and it's trying to it has tackled the wick of the Roman candle peak F high of May of 2011. And that is very important for me in my work. It says, now you've got to be careful, because if you close above 104.99, you're at a 105 in the crude oil contract. And what is this? Can it do that? It's an H contract, so it's a March contract. If it does that, that whole body is going to be vulnerable to being tested to the upside. So we've got to watch that really closely. But wait, more importantly, we've got a left side, right side price time match, which broke out Friday, 1 day early, from the high of the doji high of the 4th of January. So I'm watching crude oil very closely, because crude oil can, in fact, be a prerequisite for setting up market weakness, because if crude oil really does start to move much, much higher, people will get nervous. Then you got to watch those auto companies. They finally get things right, and crude oil goes to the moon. I mean, this is something to watch. Now, high-grade copper, for me, has been a very important thing. One of the reasons why I remained bullish for so long back in the last summer was getting back to bullish was because I was beginning to see that crude oil, that copper was beginning to stabilize. The summer before, I had to remain bullish because crude oil, in fact, was moving very nicely. And that is a harbinger of the economy, of how things are going. So very important that crude oil right now holds the 200-period exponential moving average. That's that purplish line right there. And it starts to push and close not above the week of the 17th, 3.83. It needs to clear the week of the 15th, 3.8725. It needs to clear that. Talking about clearing, it's the same thing with the euro. The EUR-USD currency pair needs to clear that peak B at 1.3329 to start leg C to the upside. If it does that, it'll be really important, because it will probably push the dollar down a little bit more. The dollar is now at 79.08, down 25 cents. But it made this peak B, and the stochastic never confirmed it at all. In my work, it's a very important indicator. If the stochastic doesn't get above 80%, it's a non-confirmation. And the MACD did move higher, as well as the histogram. Hey, but there's nothing there. So that means let's look at this whole complex, the topography of how you're looking at gold, silver, copper, the currencies. And let's look at the USD JPY, which had a spectacular move, leg B, and holding really well. It almost looks like the copper chart. So if the Japanese yen, dollar-yen currency pair is doing so well, and the MACD and stochastic are still doing extremely well, it's saying that there's been for the first time, there's been a difference, at least for the Japanese economy, because the rise here is saying that if the USD JPY contract rises and can close anywhere, it's at 79.75. If it can close anywhere in the 81.50 to 81.80 area, that's going to be really important. I had a question about the Nikkei. I'll get to that straight after the break. 877-927-6648. Now I can take calls.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Oh, I completely forgot Tuesday. I'm so busy doing the Kate Stalter. Should be a fantastic show. She talked about the stock the other day. In fact, I was wanting to buy it for my subscribers. I did the work, I did everything, and the next thing I know, TRAK, track. Look at this move. It had a fantastic move. I think she was talking about this stock at about the 29, did a little analysis about it. It's called Dealer Track Holdings Inc. Congratulations. That was really a nice analysis you did. It's a 31.70. Now, I had a question about Japan, EWJ. The EWJ, because of the USD JPY, the currency pair is moving nicely. I've got the EWJ is recycling the Chapman wave. Doing really well, walking the 9-period exponential moving average, that white line, above the 200-period moving average, which makes, it's at 994. That makes the 970 to the 955 area really strong support that must hold. So far, it's doing very well. And the thing is that the weekly chart is breaking out And I have a target of about 10.27. If it can manage to, if this can break above, if this can close the JPY, EWJ, sorry, it can close above, it's at 995, it can close above 9.06 to 1006 to 1012. I think 1027 will be the magnet to 1035. And that'll be very important because the MACD and stochastic are holding really well. Now, something just about what I'm looking at. If you're looking at, so I spoke about high-grade copper. I spoke about, okay, now look at this chart. And this is really important. What I've shown you here, for those of you who are new to looking at my charts, you'll see that I do have charts where I have none of the moving averages. I might have arches and curves and left side, right side, price, time match, etc. That's the red to the green. But look at up channels. This GLD has been in this up channel for 2 years, breaks out above it in 29th of July, the week of the 29th, spikes to 185.85 high, peak D in the Chapman wave, pulls back, goes to trough C, and what does it do? It bounces back over the up channel resistance to peak A, and if it goes to 171.24, it doesn't have to close it. It just has to get there. That's a new leg B, and says that it would be trying to get to the 170. Could get to the 174, 175.48 area of November the 11th. But look at the dollar. The dollar had an opportunity to make a left side, right side arch, a cup formation, and by this week, the week of the 24th of February, to get to 23.52. It's completely failed to do that. That's just not a good sign for the dollar. You've got the dollar failing here. If the dollar breaks and closes under 21.50, that is, I'm sorry, this is the UUP, the dollar power share DB US dollar bull, which tracks like the dollar, but not as great, but it's pretty darn good. So if that closes under 21.60. It's at 22.01. That's going to be it's very poor. Look at the interest rates. Look at the structure that I've got you. Same thing. ABCDE, ABCDE. This is the 5-year yield. ABCDE at 48.89. The whole 48th area plunges down to 26.94. It's in a trading range. I'm going to be watching that closely. So let's just sum up what I'm doing here. You can listen to my show Monday, Wednesday, Friday, 11 o'clock till noon. The most important thing, he has the E-minis. The E-minis is held as support. If the E-minis breaks above 1369.50, that'll be very positive. Meantime, what I'm looking at here, let me get you, there you are. This is what I wanted. S&P. I've spoken about the Dow. What we're looking at, the Dow has to break into the 13,070s or higher. That'll be very positive. If it pulls back sharply and closes under 12,800, not good. This is nice action. The S&P is challenging that 1370. Remember the level? If the S&P this week closes about 1373, that's very positive. Hey, you want to think of my webinar coming up Wednesday week at 6:30, the 29th. Go to the front page, check it out. Front page, check out Tom and Steve's fabulous webinar.